On this episode of After Earnings, Zscaler, the cloud-native cybersecurity company that protects internet access for nearly half of the Fortune 500. That's by inspecting all user traffic, essentially replacing traditional firewalls and VPNs. Well, I'm joined by Kevin Rubin, Chief Financial Officer of Zscaler, as we look to de-jargonize what is going on with the business's product suite. That includes the company's zero-trust security architecture that supplants a traditional castle and moat model, instead using what Kevin calls a doomsday bunker approach. We break down Zscaler's partnerships with Anthropic and OpenAI, testing those frontier models to expose security vulnerabilities. And Kevin explains why, despite partnerships with LLMs, Zscaler's stock has been the victim of the software sell-off. We also go through the war for sales talent in the enterprise software world. Let's get into it. Kevin Rubin, Chief Financial Officer of Zscaler, welcome. Very excited to have you here. I think of Zscaler almost as the $20 billion market cap company that folks may not have heard as much of as perhaps they ought to. So as we get going, Kevin, would you mind just explaining what Zscaler does for the audience?
Terrific, and thank you for having me on. I appreciate the opportunity. Zscaler is the largest security cloud in the world. We provide zero trust cybersecurity for our customers, which means that we provide least privilege access to users, devices, IoT, OT, cloud workloads, and really designed to provide the highest level of security to our customers with the world-class data, if you will.
De-jargonize that for us a little bit, Kevin. Zero trust. Go and tell, what does that mean? So to the average person who's trying to log into a cloud-based system, what it is that they're doing or not doing as a result of Zscaler's products?
Yeah. So if you think about the traditional approach towards security, it has been described as a castle and moat approach, right? So if we go back 40 years, networks were built to allow organizations to connect people to applications, to connect things to networks. And as a result, security was born out of a network-based infrastructure. And so that meant you have a castle, you have to protect the castle, so you put guards around the walls, which would be the network perimeter. You have a drawbridge and a single access point that would be, the public-facing aspect of accessing. It's your VPN tunnel, in effect. We took a completely different approach to cybersecurity. In today's environment, the internet is stable, consistent, reliable, and so you don't even need a corporate network by and large. So you can hide everything from the public view. And zero trust principles mean that we're only going to give the requesting party access to what it's seeking access for. So an example would be you're trying to access your email. We're only going to give you access to the email after we've authenticated you and authorized you for email access. And then when you're done, we're going to terminate that session and you have no access to anything else. So the guiding principles are least privilege, so only give you access to what you absolutely need for the moment, and no lateral movement. So we're not going to have any other visible applications that you could move to after you get into the castle. So to continue my example, if the traditional approach is a big castle on the hill that's being protected by a bunch of guards, we are a doomsday bunker 500 feet below the surface of the earth. Nobody can see us, nobody knows where we are, and therefore nobody can reach you. So we like to say that if you can't be reached, you can't be breached. And the principles of how Zscaler applies zero trust is that we put you behind our security cloud. Nothing that you have is visible to the outside world, and therefore it's nearly impossible for you to be breached by a bad actor.
So you're in the doomsday bunker. It's dark down there. It's dark underground. But 45% of Fortune 500 companies are clients of Zscaler. So they've taken you up on your bunker. Talk about your client base, if you don't mind, Kevin. Are you solely focused on these large, very large businesses? Is there a plan to expand into medium-sized enterprises? Talk to us about what the client base looks like for you.
Certainly. So we have about 4,500, as you described, enterprise customers. That represents, just shy of 50% of the Fortune 500 and about 40% of the Global 2000. So we go after with direct resources the 20,000 largest companies in the world, and that's kind of our ideal customer profile, if you will, of companies. So we do tend to market and go after very large organizations. That being said, we operate through a partner network primarily, and we do have partners that will serve all segments of the market. So we do have customers that are smaller, not in that largest segment, but when we think about who we're marketing to and who we're selling to, we generally focus on the largest companies in the world.
And the fact that you have that footprint, the fact that you are seeking to protect some of the largest companies of the world, has enabled Zscaler to get some privileged access recently. You took part in Project Glasswing to identify and patch severe vulnerabilities in critical software infrastructure using Claude's Mythos. Basically, it was a preview to help Anthropic figure out what the applications of this could be before it got out into general hands and posed a broader risk. Can you talk about how that partnership, how that participation in Project Glasswing came about, Kevin? And are there more of those on the horizon?
Yeah, so we were fortunate to be an early participant in Glasswing, which was Anthropic's approach to vulnerability identification in effect, and they kind of tripped over it by happenstance, right? They built a model that they didn't seek to be as powerful in cyber as it ended up being. And then we've also partnered with OpenAI on their Daybreak program, which is the similar program that they've launched to what Anthropic is doing. And essentially, these frontier models have been found to be incredibly capable at identifying vulnerabilities in software throughout the landscape. So what does that mean? Going back to my kind of castle and moat example is, your perimeter security traditionally was made up by a bunch of firewalls and VPN, a lot of hardware boxes that are controlled by operating systems. And these models have been able at machine speed, so not at human speed, but in milliseconds, be able to identify the perimeter because it's all publicly identified through IP address and figure out different pathways in. Typically, when you have a bad actor that's a person that's trying to break into a network, they'll try a particular path, and if they find a vulnerability in that path, they'll exploit it. What they aren't capable of doing is finding an unlimited number of paths to go in. So if they get blocked going through a certain entrance or a certain exposed IP, they don't appreciate all of the other connection points that they can alternatively try to navigate through. And these models have been incredibly capable of being able to go through multiple different scenarios to actually breach and get into an environment. And so we're seeing this happen at an incredible speed that hasn't been seen before. And so we're working with both of those particular frontier model vendors to help them understand what this means from a cyber perspective. We've run these models against our environment to make sure that we harden our environment. And we're now in a position where we can go talk to customers and explain the vulnerabilities and exposures that exist for them and how we can help secure their networks.
This is such an interesting example, Kevin, of where the LLMs are partnering with the likes of Zscaler to try to make sure that there is sort of mutual benefit in developing these AI-driven systems. Yet, when I look at your share price, Zscaler, like many others in the software as service industry, have fallen victim to a sell-off. Certainly year to date, your share price down as of today about 40%. So how would you explain directly to investors why the SaaScopolis is perhaps overblown, if your opinion is that it has been overblown?
Yeah. I can appreciate why the market has been so volatile for software companies. Every time, one of these advanced models gets released and new capabilities are identified, there's always going to be a fear that growth is going to be impacted by the consequence of these models. And investors generally value software stocks based on future growth potential, which translates into future profitability potential. And for many of these companies, that's far in the future. And so if these models are perceived to be replacing the value that enterprise software is providing, then the presumption is growth slows, and therefore they're less valuable today than thought to be. So I can understand why people get concerned. And the challenge is every time a new model comes out, they seem to be able to do things that were unimaginable before. And so you're just in this highly new territory. It's not very well understood, and people don't know where it goes. The reason I think it's overblown is that large enterprises are buying software and services, not just for what those software and services provide you, but also the enterprise grade, the hardening, the support, and the ability to have a vendor that they can look to hold them responsible should something go wrong. So I do think it's overblown. I don't think that you're going to have companies vibe coding ERP systems or people and culture systems and replacing those overnight. But it does beg the question, do I need as much of those systems over a longer period of time as I needed today?
Growing a business has never been easy. If it were, spreadsheets would be optional and stress would be a hobby. Whether you're navigating a complex industry or actively trying to reinvent one, KeyBank brings a deep bench of banking experts who collaborate on market-proven solutions. They're not just here for the business you're running today, they're here for the one you're building toward next. Reimagine business as usual, KeyBank opens doors. Learn more at key.com/B2B. That's key.com/B2B. So talk about how you're using AI internally then, Kevin. On the flip side of that, if AI is not, in your opinion, going to impede growth on the top line, how can it support expansion of profit through cost control or other means when it comes to your bottom line?
Well, one point of clarification, I think we are often put in the software bucket, but we're actually a service. We're providing a security service that is leveraging software. And so, it doesn't seem very likely that the frontier models are going to build out a large global security cloud network of over, 160 points of presence and thousands of, private edge environments. So there is just a significant level of infrastructure that we've built out in our business. And then again, we're providing a service that is, informed and supported by the software that we develop. So just from an external perspective, I think oftentimes it's forgotten that what we're actually providing is a service and not just software. Internally, we look at AI from the lens of how do we pair our workforce with AI, right? It's not a discussion around where is AI going to replace our workforce, but rather how are we better together? And we really do look at outcomes and impacts of this technology. Now, look, that's not to say that there aren't tax or activities that are going to be automated, because certainly there are going to be tasks where, they're being done by people today. They can easily be, replicated at a higher level of precision with technology. But that doesn't mean that the need for the employee, the need for the context and domain experience isn't there. So like many companies, we're, continuing to expand the use of AI internally. We've seen some very good success early in engineering and how we think about being able to accelerate innovation and code development. We're seeing a lot of positive opportunities in customer support and ticket deflection, as well as, in other areas of the business. But those are the large areas where we've really seen high impact.
Let's talk about how you've sought growth in other ways, Kevin. Let's talk about international, a recent partnership with Singtel. You've got operations in India. Give us a sense for how it is you're expanding beyond the United States.
Yeah. So we are a true global business. We have offices in it's got to be over 30 countries today, and we probably serve companies in probably up to 100 different countries. So we are a true global business. I mentioned the global infrastructure that we have, so over 160 points of presence around the world where we operate our own data centers, which forms the largest, as I mentioned, the largest security cloud in the world. We drive over 500 billion transactions a day through our cloud service, which is orders of magnitude greater than Google searches in a given day, just to put that into context. In terms of regions, the US is our largest market, followed by Europe, and then followed by Asia. We do have a heavy presence in India, both in terms of customers as well as workforce, and that has been the case since the early days of the company.
Talk about specifically the AI and Cyber Threat Research Center that you have in
Mhm.
India, Kevin. Talk to us about what that is.
So part of being a cybersecurity vendor is really also being a domain expert around cyber threats and what exists in the world today, and how do we provide insights and partnerships to our customers and prospects around the threat environment and what we're seeing. And so we have a large research center whose sole purpose is really to understand the current threat environment, what could come, and how do we help secure our customers.
And why in India? What was the rationale for there versus in other geographies or partnering with other institutions?
So we do have resources globally. Jay, our CEO founder, is from India, and I think there's a great sense of pride that we are able to operate a very large operation in India and support a large population of Indian customers. So that's just, I think, core to the company and its original establishment.
M&A has also been an active space for you, Kevin. You've got the acquisition of Symmetry Systems recently. Could you talk to us about what your M&A strategy is?
So we've historically focused on technology and team depth, right? We haven't been an acquirer that goes out to just buy customers and revenue, but rather, how do we think about accelerating our roadmap, being able to bring innovative technology to market faster? And so we've really used M&A as a ability to do that. We've done, I think, 4 acquisitions this year already. And 3 of those were specifically in that area. So Symmetry, which was the most recent acquisition, provided us with a very interesting access graph technology that we're using as a component of our AI strategy. So being able to really understand, as you think about agents and the permissions that they inherit from either users or systems, are they appropriate permissions for that agent, and is it appropriate for the use that they're requesting? So going back to my example about least privilege, if we want to prevent a user from accessing things that are not appropriate for their access, that becomes even more important when you think about what likely is the case in the near term, where you're going to have millions, or not, if not billions, of agents trying to do work on behalf of an organization. And you want to be able to know that those agents are accessing only pieces of information, applications, and data that they are authorized to access. And so Symmetry will provide an opportunity for us to really understand what permissions are being extended to different types of entities that are seeking access.
And when you take a look at the landscape of potential acquisition targets, Kevin, it feels as though you're hunting for deals in a space where there are a lot of very well-capitalized potential purchasers. What are you seeing in terms of the multiples that it's likely that Zscaler is needing to pay up in order to be successful in acquiring some of these businesses?
It depends on the space, and if you're an AI company, they tend to be much higher multiples than other areas of technology. But that's what the value of these companies are today. And if you want to be competitive and have an opportunity to access this part of the market and acquire this technology, you're subject to paying what the going rate is for these technologies.
So talk to me about how you actually objectively assess valuation, right? Yes, there's sort of the market clearing multiple, but in terms of return on investment, in terms of the parameters that you have for delivering synergies, for example, what is it? What is the framework that you're using to assess some of these acquisitions?
So we have a very mature business development and corporate development function that does evaluate different companies and technologies to determine whether or not those would be interesting acquisitions or partnerships for us. When we do make a decision to go down a path of potentially acquiring a business, we have a very robust framework of how we evaluate what the technology will mean for us as a business, how we can drive synergies, either top line or bottom line synergies as a result of that acquisition, and then what's the internal rate of return on that potential acquisition, given what we think we can do with that particular technology. And some of these fit very nicely into these models, and they're no-brainers, and others take a leap of faith, and you've got to believe that the 1 + 1 = 3, 4, or 5 does play true in some of these examples.
Well, let's just wrap by talking about your earnings and some of your financials here. Earnings and revenue did beat expectations, Kevin. That being said, guidance did come down. Talk to us about that. Talk to us about what changed. Why did that happen?
Yeah, so there were two components to guidance. First, we slightly raised the full year, but we did not pass the Q3 beat, so that was perceived by the street as soft guide for the rest of fiscal 26. And then for fiscal 27, we gave an early look that was a bit below the street, and we thought it was important to provide that alignment to the street today, as opposed to a quarter out or a quarter after that. So we wanted to make sure that we were being very transparent and clear with what we were seeing in the market. We also called out two factors to that. One being we had two senior sales leaders depart the organization in the quarter, and one has been backfilled with an internal promotion, which is great, and I think reinforces the quality of development in talent that Mike has built within his sales organization. And the other will be likely an outside hire that will join. But we also recognize with any sort of leadership transition, there is uncertainty that could play effect. And so we wanted to be mindful of that as we gave kind of our early look for 27. The other factor that was at play is we did an acquisition a year ago in the SecOps space, and we just announced actually yesterday at our user conference the integrated SecOps product that we will be migrating that business to. And so the rate of uptake of that product as we go into 27, specifically amongst the existing customers, is something that we don't have great visibility to today. So I wanted to be cautious around both of those 2 points.
Can you talk about the war for sales talent, Kevin? There's so much dialogue at the moment about the war for AI talent. But when I look at a lot of software businesses or SaaS businesses, even as folks are perhaps reducing headcount in some, technical functions, a lot of folks are trying to hire more salespeople and more account services people. Losing 2 salespeople and then and adjusting market expectations, that's a big move to make for losing 2 individuals. So talk to us about how it is that you're competing for talent that can drive your top line.
Yeah, I think in the enterprise software world, sellers want to go to a company where they believe they can be successful, they can outperform, their goals, and they can be part of something. And we think that we have all of those ingredients. So we do think we are a destination of choice for salespeople. It's also a reality that salespeople and sales leaders move around. One of the individuals that departed had been with us for almost 10 years. So I would say that that was a mutual and equal benefit that we got from each other over a very long period of time. And one of them did depart to a pre-IPO AI startup. So, there is an attractiveness for folks to go there. But look, we have an incredibly talented sales organization with a great leader under Mike Rich. And, the reality is that over time, you end up seeing, people come and go from the organization. And we've been, very fortunate to be able to attract very top tier talent for quite some time.
I want to just finish by asking you, Kevin, about your capital allocation decisions from here on. As I look at your 9 months ending April 30th, operating free cash flow, $850 million. So pretty healthy operating free cash flow conversion rate. How are you thinking about keeping capital, your war chest for M&A? Are you thinking about dividends? Are you thinking about buybacks? How are you looking across the spectrum of uses of cash?
Yeah, thus far we have been very focused on strategic use, and I say that both in terms of how do we invest in the business to accelerate innovation and growth, and how do we use our capital to accelerate that as well. And so that's been the focus of kind of the war chest as you described it, and I think you'll continue to see us use it in that fashion.
Kevin Rubin, Chief Financial Officer at Zscaler, thank you very much for joining. Appreciate it.
Thanks for having me.
I'm Anne Berry. Thank you for tuning into After Earnings, the show that brings you up close and personal with the executives behind the world's most interesting publicly traded companies. If you learned something today, don't forget to like, subscribe, and share with your friends. And come back for our upcoming episodes featuring the CEOs and CFOs of Twilio, Match Group, Prudential, and many more. We'll see you next time.